Good afternoon, ladies and gentlemen. I would like to extend a very warm welcome to all our participants, dignitaries, and our esteemed guest speakers to the online seminar on Rebooting Economy, Role of NBFCs, organized by the IMC Chamber of Commerce and Industry. Before starting the event, I would like to thank our silver sponsors, Shriram Transport Finance Company Limited and Magma FinCorp Limited. Our logo sponsors, Shapoorji Pallonji Finance Private Limited and Tata Motors Finance Limited. All participants will be muted to avoid any disturbances during the course of this session. To consume less bandwidth and have clarity, you may like to stop video streaming at your end. Kindly post all relevant queries in the chat section so that the same can be addressed during the sessions. To begin the session, may I request Mr. Rajiv Poddar, President, IMC Chamber of Commerce and Industry, to present the welcome address. Over to you, Mr. Poddar.
Thank you, Selvi. Good afternoon, ladies and gentlemen. On behalf of IMC Chamber of Commerce and Industry, it gives me immense pleasure to deliver the welcome address on the online seminar Rebooting the Economy, the Role of NBFCs, organized by IMC's NBFC committee in association with Finance Industries Development Council, FIDC. A very warm welcome to our speakers, Mr. Ramesh Iyer, Mr. Raman Agarwal, Mr. Srinivas Raghavan, Mr. Sanjay Chamaria, Dr. Narendra, Mr. Srinivasan, Mr. Nath, Mr. Unmesh Revankar, Sailesh Haribhaktiji, Mr. Atul Joshi, and all our participants. NBFC has played a very important role in promoting inclusive growth in the country by catering to diverse financial needs of bank-excluded customers. Further, NBFC often takes a lead role in providing innovative financial services to micro, small, and medium enterprises most suitable to their business requirements. NBFCs are financial intermediaries engaged in the business of accepting deposits, delivering credit, and play an important role in channelizing the scarce financial resources to capital formation. They supplement the role of the banking sector in meeting the increasing financial needs of the corporate sector, delivering credit to the unorganized sector and to small local borrowers. However, they do not include services related to agriculture activities, sales, purchase, or construction of immovable properties in India. Despite being different from banks, NBFCs are bound by the Indian banking industry rules and regulations. NBFCs focus on business related to loans and advances, acquisition of shares, stocks, bonds, debentures, securities issued by the government or local authorities on other securities of marketable nature, leasing, hire purchase, insurance, business, chit businesses. The banking sector, however, will always be the most important sector in the field of the business because of its credibility in supporting manufacturing infrastructure development and even being the backbone of the common man's money. But despite this, the role of the NBFCs is critical, and their presence in the country would only boost the economy in the right direction. Needless to say, NBFCs will continue to play an essential role in the company's growth story. We've had an excellent and very progressive monetary policy today, and which Mr. Iyer will be elaborating on or touching on briefly and explaining how it will benefit the NBFC sector. I'm confident that today's seminar will be beneficial to all the delegates. I would like to thank Mr. Mahesh Thakkar, Chairman of the Committee, FIDC member of NBFC Committee of IMC, our sponsors, and all those who have worked diligently for the screen and organizing this seminar so meticulously. With these few words, I welcome you all to today's seminar. A few lines about IMC before I close. The IMC Chamber of Commerce and Industry is an apex chamber of commerce, industry, and trade in the Western region with its membership base of over 5,000 members and over 150 trade associates affiliated to it. Together, it represents and advocates interest of over 4 lakh businesses and industry establishments across the country from diverse sectors of industry. Welcome once again, and thank you very much for being with us.
Thank you, Mr. Poddar. May I now request Mr. Mahesh Thakkar, Chairman, NBFC Committee, IMC Chamber of Commerce and Industry, and Director General, Finance Industry Development Council, to apprise us on the state of NBFC sector and plan of action by IMC NBFC Committee. Over to you, Mr. Thakkar.
Thank you, Selvi. Welcome all my NBFC colleagues, my directors, my IMC members and IMC trustees and directors and past presidents. It's a lovely opportunity provided by IMC in the beginning of the year. We normally have the banking and NBFC seminars, Rajivji, towards the end of the year, and somehow last 2-3 years what has happened is some exigency happens and it gets postponed. So this time we decided to let's have one seminar at least in the beginning of the year, and if the time and opportunity permit, we can do it one more towards the end of the financial year. Thank you, and I welcome all of you once again. Thanks for joining in such large numbers in these critical times. Friends, Indian Merchants Chamber have the privilege of last 20 years where the banking and finance company merged together. But last 2 years we have done banking and NBFC committees separate. I thank Rajiv Podarji for that, and because the issues are different and we take up the issues, the size of NBFCs have grown in stature has grown. So we need to address NBFC issues differently from banks and also coordinate with the banking committee on the common issues. We have two co-chairmen, Ramesh Iyer and K.V. Srinivasan, and 17 big NBFCs as the members and 3 independent members as the financial experts. So with this team, IMC NBFC committee is very strong, and I'll tell you in 2 minutes time how we want to go through during the year and take it further. I thank the President Rajiv Poddar also for taking our issues from time to time at the IMC platform by the media and the regulators. They have represented very well on decriminalization of check bouncing. They have done the representation on interest rate, restructuring, funding, and recently on the restrictions opening of current accounts by the banks. Friends, I will not go into the details of what the sector has been doing, but as you know that today we are almost 20% of the gross domestic production, and the finance which is being given in the country, which was less than 5 years back, it was 5%. As you know that the financial inclusion goal can be achieved only by the NBFCs. The banks alone cannot do it. And that's why for the MSME traders and entrepreneurs who are the members of IMC, this seminar becomes very important. And at the end of the session, we shall also announce the programs and the help desk to be addressed throughout the year so that the members can get in touch with the funders and solve their problems. Today, of course, we shall dwell upon the post-COVID situation of the NBFC sector only. That's liquidity, funding, moratorium, restructuring, recovery and collections, business scenario, future opportunities, and how we can partner with MSMEs for IMC members. From an NBFC perspective, liquidity and restructuring are more important. And from the IMC perspective, member perspective, funding is the most important. That's why we have kept 2 sessions which will develop on both the issues. Well, recent times, as Mr. Iyer will and Mr. K.V. Srinivas and other panelists will say, NBFC's role has been well recognized in last 6 months in COVID times by Government of India, Ministry of Finance and Reserve Bank of India. We had, got the earmarked funds specifically for small NBFCs, guarantees by Government of India on the bank funding given by the NBFCs, which are unprecedented situations. IMC and FIDC both welcome the today's monetary policy also, which will be discussed. We have 3 or 4 good announcements for the NBFC sector today morning. At IMC and FIDC jointly, I propose, Rajivji, we can discuss whether, we can have the help desk with the FIDC and the IMC Banking Committee for discussing the funding issues of the IMC members throughout the year. They can put it on the email, of course, these days. We need not have the table space for this purpose. And we can reply the Banking Committee or the NBFC Committee, and FIDC has got 17 directors also can, solve their problems, and will be very, very happy to solve their problems and provide funding guidance to them. How a chamber can be a consultative partner with the government also needs to be discussed, not only government of Maharashtra, but government of India, Ministry of Finance and Reserve Bank of India, as well as SEBI. And whether we can do joint programs with banking committee where we can solve these problems. And one more suggestion which IMC also can carry it further through this committee is bigger NBFC Rameshji can finance the smaller NBFC so that a right message is given to the financial sector as a whole, and the confidence is built up in banking sector to co-participate with us. These are the issues which we can discuss during the seminar. We have 2 sessions, and of course, all of you know about it. I have been sending the emails more than 10 times in the last 15 days. I will not discuss what the issues are being discussed, but the 2 sessions which are earmarked is the liquidity concerns for NBFCs as well as the funding for the MSMEs, traders and entrepreneurs, which will be very useful for the IMC members who are present. Last 10 or 15 minutes in each session will be reserved for the questions by the audience here. So please put in your questions in the chat session. The chairman of the session will be very happy to take it up. Again, before I hand over to the Mr. Ramesh Iyer for session 1, personally on my behalf and IMC's behalf and FIDC behalf, thank the sponsors, Shriram Transport Finance, Magma FinCorp, Tata Motors Finance, Shapuji Palanji. Rajivji, this is the only platform where Shapuji Palanji and Tata Motors are together. IMC team, for IMC President, Vice President, DG, Ajit, Sanjay Mehta, Bharti, Selby, and all this have worked day in and day out at IMC. Thank you all, and wishing you all a meaningful, fruitful, insightful interaction and deliberations. Do take very good care of yourself and stay safe. Over to you, Selby. Thank you.
Thank you, Mr. Thakkar. As we begin with the first session on liquidity concerns for NBFCs, I would like to invite the chairman of the session, Mr. Ramesh Iyer, co-chairman, IMC NBFC committee and vice chairman and managing director, president, financial services sector, and member of the group executive board, Mahindra and Mahindra Financial Services Limited, and chairman, FIDC. And the esteemed panelists joining him in the session will be Mr. Raman Agarwal, Independent Director, Paislow Digital Limited, Mr. T.T. Srinivasa Raghavan, Managing Director, Sundaram Finance Limited, Dr. M. Narendra, former Chairman and Managing Director, Indian Overseas Bank. To initiate the proceeds, I now hand it over to Mr. Iyer. Over to you, Mr. Iyer.
Thank you. Good afternoon, friends. Thank you to President IMC and Mahesh Thakkar for organizing this seminar. I think a very, very timely seminar, I would say, given the situations. It is no doubt in our minds that NBFCs play significantly an important role in the overall economic growth of the country. And it's not today, it's from last 50, 60 years or more, we have witnessed that. And NBFCs are structured very differently. They cater to different segments of consumers, different geographies, supporting different product acquisition, and have played a very significant role. If I may say so, while we do look at the assets which are collateral, but NBFCs are one sector which look at the borrower as the key for lending and not their current financial status or the underlying collateral. We look at their future earning ability and support such consumers. And that's the reason why in every situation, whether in good times or in difficult times, NBFCs have played a very significant role. More so in difficult times, where we don't find many financiers willing to reach out to these consumers, understand their future earning capabilities, and provide credit. NBFCs have always been the flag bearer who have reached out to these consumers and have provided credit to all of these individual consumers who are many, many times the first time taker of the loan for acquiring assets for their livelihood. So therefore, NBFCs not only play a significant role in the economic development, but also bring in a huge social impact. All of us know that liquidity is the key to success of any financial services model, and therefore it's extremely important that we bring out the need and the support that is required by NBFCs, alike the big ones, medium, the small ones, so that collectively all of us could reach out to those consumers and provide the credit and kickstart the economy to really go the big way. It is a misnomer many times to believe that NBFCs compete with bank. It is a misnomer sometimes to believe that the small NBFCs don't contribute significantly. And I would like to clarify that every NBFC, be it big, medium or small, have their specific role to play. And they play it so exceedingly well that if you look at the data for the last 5, 10, 15 years, you would recognize and realize that what is the real key role played by these NBFCs in overall supporting the economy. It is always that we look at the overall credit and we feel NBFCs have a small role to play. But if you look at specific credit provided to certain specific segments, you would find NBFC have a very high market share in those segments. So therefore, my dear friend, it's extremely important to understand the role of an NBFC. Undoubtedly, after the COVID, there has been a lot of initiatives that the government has taken. The finance ministries have initiated a lot of initiatives from the regulator, the central bank. All of that has definitely helped NBFCs to participate. But at the same time, it is important to understand that not all NBFCs are able to get the desired liquidity support as they may want it to be. Especially the small and the medium ones have been expressing over and over that they would like to receive better credit support so that they could continue to support their consumers and keep the economy going. After the moratorium was announced, we had all to give the moratorium to our consumers, and therefore the cash inflow from the consumers had also stopped. That put additional pressure on the NBFCs, and that is the reason why NBFCs were pitching for additional liquidity support. Historically, if you look at, NBFCs have been a great repayer of their credit taken from any system that they have borrowed, whether it is from the banking system, whether it is from the debenture market, whether from the insurance companies, even from the retail depositors. You will generally find NBFCs have repaid their loans well on time, almost all the time. Yes, there have been instances where one or two NBFCs have failed, and that has put a mark on the overall NBFC as an industry. And we've tried our best to over and over explain that it is not always correct to look at everything into one lens, and it is necessary to look at each NBFCs possibly differently, especially the ones that we are talking of, which are very retail in nature, very deeply penetrated, have demonstrated the credit repayment culture extremely, extremely well. I'm extremely happy today that in the RBI monetary policy, there have been various initiatives that have been put to place, which will help availability of liquidity to the NBFC sector. It's also extremely important that the co-lending model is being discussed and rules and regulations will be announced around that. But we would still continue to request that when these liquidity measures are being taken and made available, they are made available to every NBFC and appropriate steps be initiated also in that direction. Today in this panel, you would definitely hear from all my co-panelists the details of each of this that we are representing, and you will be happy to note that we have a mix of panelists who come from different segments of NBFC, and I'm sure that all of us would be hugely benefited by this debate and discussion. With that, I would stop here, and I will now request my other panelists to also introduce themselves. Mahesh, if you can take it forward, whatever is the next format. But I'm reasonably sure that the theme of the conference, rebooting the economy, is something extremely important. And you will see at the end of the session, with all debates and discussion we will have, there will be very clear way forward which will let us know how we propose to reboot the economy. Over to you, Mahesh.
Mr. Mahesh Thakkar?
Yeah, hello.
Yeah, your video is not on, sir.
Yeah, I am actually trying to upload that. The other speakers can take it over. Rameshji.
Can I invite Mr. Srinivas Raghavan to introduce and make his comments?
Thank you, Ramesh. Thank you as well, IMC and Mahesh Thakkar. I hope I'm audible.
Yes, sir. Yes, sir.
Yes, sir, you're audible.
Thank you. So thank you for organizing this very timely and topical seminar. And thank you as well for inviting me to share my thoughts. I will try not to repeat some of the points that Mr. Iyer has made. But essentially, as you look at the landscape today, everyone talks of NBFC as though it is one homogeneous model. And I think that itself is a huge fallacy because NBFCs, both in terms of size, in terms of geography, in terms of the assets that they finance, in terms of the risks that they finance, are as heterogeneous as anything could be. So to sort of club everybody under one heading of NBFC, to my mind itself, is a fallacy. And this is, of course, a representation that we've made to the regulator over a number of years. Fortunately, for a period of time, we actually had different categories of NBFCs, but more recently, for whatever reason, RBI decided to merge those categories back, which is why you today have a situation that this granularity, which I'm talking about, unfortunately, is not available. But, be that as it may, this is our reality. And the only reason I brought this up is to sort of bring out the fact that the challenges that NBFCs face are very different depending on, which part of the spectrum you fall in. Now, if you look at the higher rated companies who are rated, let's say, AA and better, now they stand on a very different footing from a company which is rated BBB, or worse still, a company which is not rated at all. Now, I'm sure all of you or most of you have come across this number of 12,000 NBFCs, right, registered with Reserve Bank, or whatever that number is. It's a huge number, right? Now, this 12,000 hides more than it reveals. Because if you look at it at the other end of the spectrum, which is the large NBFCs, you're probably talking about a few hundred. And these few hundred account for both 90% of the liabilities and 90% of the assets of the entire NBFC universe, right? So you're really talking about several thousand NBFCs, which do perhaps 10 or 15% of the business, but they are the guys who service and who reach segments of the economy which the large players will never be able to do. So this is one very important thing to understand. The second thing also, in any discourse around NBFCs is that within the NBFC universe, you also have 3 or 4 very large NBFCs, which are essentially PSUs, like Power Finance Corporation, Rural Electrification Corporation. You have 3 or 4 NBFCs, which 3 or 4 entities which are classified as NBFCs, but who are really not part of the mainstream NBFC system that Mr. Iyer referred to. So once you understand these contours, you begin to then realize that the funding and liquidity challenges vary dramatically across the system. So if you're a PSU NBFC, virtually then, funding is not a problem at all. Or if you're a AA rated or a AA plus or AAA rated NBFC, like many of the larger ones are, then they have access basically from pretty much everyone. The banks, the mutual funds, the insurance companies, from external commercial borrowing sources. So for them, literally, this funding challenge which is being talked about so much is not of the same magnitude. Of course, today, mutual funds perhaps are not one of the available sources. For their own reasons, they have pulled back. But otherwise, pretty much the entire spectrum is open. But when you go to the other end, which is the smaller NBFCs, that is where you start to see some of the real problems, because capital markets are close to them. The external commercial borrowing market is close to them. Insurance companies are close to them, which means they are effectively left with their own capital and whatever little bank funding that is available. And this is where I think the real problem has arisen. Smaller NBFCs, especially in the wake of the two unfortunate credit events that we had, the first one being ILFS and the next one was DHFL, thanks to these two, the entire NBFC sector has been tarred with, a terrible brush, which has sort of created this impression that NBFC automatically means high risk and NBFC automatically means default. As Mr. Iyer said, if you go back in time over the history of nearly 75 years of the NBFC industry, you can count the number of defaults on literally the fingers of one hand, right? Which is also incidentally the same number of defaults that have happened in the banking sector. Nobody says, therefore, shut down banks, right? Just because you had one or two bad experiences. No, there's never a clamor for shutting down banks. And it's the same thing with NBFCs. Because you had two bad eggs, it doesn't mean you shut down the sector. So now, addressing specifically the issue of liquidity, I think the need really of the hour, and I must here admit that what both RBI and the government, MOF, have done in the last 6 months since the COVID pandemic broke out is really admirable. I think they've taken a number of steps which have never been taken in all these years to help NBFCs, specifically address the issues relating to smaller NBFCs, because at the end of the day, on the asset side, we keep on talking about MSMEs. But in reality, even amongst the NBFCs, the majority of them are MSMEs themselves. Though they are not so categorized or classified, they are also MSMEs. They too deserve and need to be supported, right? And this is something which I think both the RBI and MOF have recognized. So if you look at whether it's the TLTRO, whether it's the GECL, whether it's the special funding windows that they've opened up through SIDBI, NABARD, etc., I think there has been a great realization on the role that NBFCs play. I think it's important to realize that banks and NBFCs are actually part of the same continuum. Banks are wholesalers, NBFCs are retailers. So if banks provide the wholesale funding to the retailers, which are the NBFCs, then NBFCs have the knowledge, they have the understanding and the reach to actually serve the underserved, the underbanked segments of the economy and truly meet the country's aspiration of financial inclusion. Because financial inclusion, you can keep talking about endlessly, but in order to actually achieve financial inclusion, you need the instruments, you need the agencies who will deliver financial inclusion, which is who the NBFCs have been and who the NBFCs continue to be. co-lending actually is a recognition of the fact that NBFCs understand this segment of risk very well. And I hope that some of the steps announced today will also go further towards enhancing the collaboration between banks and non-banks, and further down the chain, for example, with MFIs. Because all of us, to my mind, are part of the same continuum. We are all part of the same national mission to deliver credit to those who need it the most. So I will stop here and then we can go back later for specific issues and questions.
Thank you, TTS. May I request Raman to make his initial comments, please?
Thank you, Rameshji. And at the outside, I must thank and congratulate IMC for this wonderful seminar. And as has been said, this is the right opportunity. Friends, let me just at the outset say that I will focus my thoughts on the small NBFCs issues, funding, liquidity, etc. You just heard two, I would say, not only the veterans, the leaders, whatever term you may call, of the NBFC industry, not just because they are the MDs or CEOs of the leading NBFCs, but by sheer experience and understanding, as could be gauged from their talk, you can see the passion they carry for the concerns of small NBFCs. And I am a witness for this, that they carry the same passion when they are sitting before ministry, even the finance minister, or sitting before the governor of RBI, and taking up and fighting for the concerns of smaller NBFCs. That is where I think the real strength and beauty of this sector lies, that we have perfectly harmonized and gelled the bigger ones with the smaller ones, whether, as is being talked, biggers now starting to fund the smaller ones, or the bigger ones ensuring, because they realize that it's not only, there is no competition, because unless the smaller guys fund, say for example, if you're talking of a vehicle segment, unless the smaller ones fund a used three-wheeler, there cannot be a demand for a new three-wheeler, which will be funded maybe by the bigger ones. So it is that kind of a business understanding and mutual understanding which is really held. Having said that, let me now quickly come to the concerns and some of the measures which have been announced today. Friends, I think, what have as was said, that, as they say, there is always an opportunity in crisis. And whether it was ILFS, it started with ILFS and DHFL defaults and gained strength post-COVID, that the real recognition and the need to support the small NBFCs really came up. And I would say both RBI and government, Ministry of Finance, literally swung into action with a slew of measures. Now, what happened was, if you look at starting from, say, 2018 onwards, and various measures which were announced, whether it was TLTRO window, whether it was partial credit guarantee scheme, whether it was the special liquidity window under the Atmanirbhar package, whether it was the TLTRO2, funding given to SIDBI, NABARD, while there were measures, but still the ultimate outcome was found to be below expectations, both in terms of the numbers and the quantum dispersed. For example, the special liquidity window, which closed on 30th September, out of the allocated amount of 30,000 crores, only 7,000 crores were dispersed. Now, we really did a thorough study, and I think I'll quickly touch upon that. There were three clear bottlenecks which can be identified. So if you look at all these steps, whether TLTRO, partial credit guarantee scheme 2, etc., they are all looking at providing funds to banks, and with the direction that these banks should then invest in the bonds, NCDs, or CPs issued by NBFCs. Now, this measure itself, the fact, because we all know that the large number of small NBFCs, as was just said by Rameshji and TTS sir also, they do not access capital market because of the complexities in the SEBI norms. They do not issue bonds, they do not issue NCDs, they do not issue CPs. Their mode of borrowing is simple term loans. Now, the term loans as a mode of borrowing for these NBFCs was not covered under any of these schemes previously. So this itself meant that these NBFCs were denied funding under TLTRO or under the special liquidity window, or even under the partial credit guarantee scheme too. But today, that is the most significant, and I'm happy based on FIDC, IMC, and everybody's representation when we brought to the notice of RBI and government. Today, what they have said is that now the TLTRO window is on tap. That means anytime banks can go and raise money. Then they have said that they can use this money to not only invest in bonds, but also use it for giving term loans. So for the first time, RBI is clearly telling banks that you can use the TLTRO money to give term loans to NBFCs and HFCs. That's a very, very significant step. Similarly, in all these schemes earlier, whether it was TLTRO, PCG, again, I say, there was a minimum prescribed level of credit rating. Whether it was in partial credit guarantee scheme, they started off with AA, then it was brought down to BBB plus. Similarly, in special liquidity window, they said minimum investment grade rating. And we all know the problems which some of the NBFCs face because the rating agencies unfortunately follow a same rating model and scale. That was the challenge. But today, RBI again has not prescribed any minimum credit rating. That's again a very significant step. So they have in one shot removed these two bottlenecks by allowing term loans and not prescribing any minimum level of credit rating. These are two very, very, very significant steps announced today, which will, I think, it's a very loud, clear message coming from the regulator to banks that please shed that risk aversion, whatever funds are being made available, and we are giving you funds on tap. Whenever you want, you can on tap raise money at a repo rate of 4 or 4.25% and use that money to lend to NBFCs. Even HFCs have been included. And obviously, the bare minimum interest rate which a bank will charge from an NBFC would be what? If it's a very highly rated company, 7-8%. But going down the line, the rates can go up to even 10, 11, 12%. So there is a very good quantum of spread which banks can earn on this money. So it's a real incentive given, message given to banks to lend liberally to NBFCs, especially the smaller ones. Then friends, coming to the co-origination model, as very rightly and aptly put by both Rameshji and TTS sir, that this is on one side a clear recognition of the strength of NBFCs in sourcing and doing collections. And it's a marriage between the strength of banks. Banks are flush with funds. So let the two marry and create a co-originating model, co-lending model. However, till date, the RBI guidelines permitted only non-deposit taking systemically important NBFCs to do co-origination. That means out of the total NBFCs of about 7,000 and 8,000, only 260 or 70 odd NBFCs were allowed to do co-origination. This itself restricted the scope of co-origination. And today, Governor RBI has clearly said it that we are allowing all NBFCs, all. So that means no size restriction, no restriction deposit taking or non-deposit taking. All RBI registered NBFCs, including HFCs, have been allowed to do co-origination. So I think this opens up the field far and wide. See, because let's appreciate, I'm sure all the small NBFCs do have a relation with one or two of the banks with whom they have been raising funds over the years. Use your relationship with that bank and you can enter into a co-origination arrangement. So you can do a mix and match of getting funds and doing on lending or having a collaborative model with the bank and doing a co-lending. So these three steps today in today's RBI's policy, I think, are a very, very clear recognition and a message given. I think this is a golden opportunity. Of course, it all depends on how banks take it, but I'm sure with the kind of push which the government and RBI is giving, going ahead, things will look far better for the liquidity point. And finally, one last quick point, as has been said, that there is also perhaps a need now to also give some dedicated funds to SIDBI NABARD for a longer tenure. Tenure is another issue because till date, the measures announced were giving money to NBFCs for a tenure of 6 to 18 months, whereas when we lend, we need money for at least 3 years. So I think some allocation could be given to SIDBI or NABARD for at least a 3-year period, which could be then on lent to the smaller NBFCs. So I'll stop here. I think the key points have touched. Yes, we can take in the question section. Back to you, Ramesh.
Thank you, Ramanji. Just one point I wanted to make before I call the next speaker, which is, this is a great time for all of us as NBFC, whether small, medium, big. We have never tried to explain to our banker what our business model is. We have always tried to explain to them our credit capability, and we have tried to borrow from them. I think with this co-origination coming up, it's extremely important, my dear friends, that each one of us, whatever business we are running in NBFC, try and explain to your banker what your model is, how strong you are, how fundamentally strong you are, what are your collection mechanism, how deep rooted, how penetrated you are. That will attract them to make you as their partner for co-lending. If you're going to just go and tell them, we will resource customers for you, I think we will all look like intermediaries. I think we shouldn't go to that path of becoming an absolute intermediary. I think we are knowledge-based, physical presence, digital-enabled, customer-incited, and relation-developed NBFCs over a period of time. So please, my dear friend, my request is present your strength to your banker and attract them to become your partner. I think that will sustain much, much longer. Having said that, now I invite Mr. Dr. Narendra to make his opening remark, a veteran in the banking industry and been associated with NBFCs for very long. I'm sure as a banker, you would have also had some of the thoughts that the current bankers have, whether to give money to NBFC or not to give money to NBFC, or was he a different banker who aggressively gave money to NBFCs? So I now invite Dr. Narendra to make his initial remark. Over to you, sir.
Thank you, Ramesh ji, and also my earlier speakers. And also thanks to IMC and FIDC for having invited me to this very important and very relevant webinar coming at the right time. We have been talking about on the funding for the NBFC. And here I, of course, as I or all of us know, that as the NBFC has been a very important institution which channelizes the credit to the smaller MSMEs or to the other specified segments, and also in the hitherto unserved sectors. Banks have been always supporting NBFC, and the growth of the NBFC sector all these years, I am sure they would acknowledge that there have been a role by the bank. Now, to supplement that statement, as on 31st March 2020, Indian banks have lent around more than 8 trillion Indian rupees to NBFC, with a growth of last that prior to the means between 1920, that growth has been 26%. So that shows that there have been a substantial contribution of banks in the growth of the NBFC and in funding, making available liability or funding to them. Similarly, I saw some data that the mutual fund industry had also supported the NBFC. In fact, at a time, some time back, they had a contribution of 1,29,000 crores to the NBFC sector. Of course, there I'm getting the latest figure that has come down to 49,090 crores. So that may be the impact due to the big, what we are talking about, some 2 big NBFC and few others also, which are all defaulted. The mutual fund being, it is a small investor's money, they have to have a little care about the such investor interest and their sectoral, what you call, exposure. Currently, they have brought down. And similarly, of course, I have been seeing some of the other data that due to the RBI liquidity measures, as well as their that 2 of the measures of LTRO, that 1 and 2. Similarly, on the government side, bringing quite a lot of measures. I saw that overall in F21, the fund mobilization in capital market increased by around 14% to 4.53 lakh crore in August 20, compared to 3.98 lakh crore in the same period in the previous year. Of course, definitely as mentioned by Raman, also Agarwalji and others, AAA rated, AA rated, and even maybe A rated, because and banks would have also have changed their what you call investment policy. Earlier they were catering only according to the investment policy AA above, and with the change in the RBI also and the government, and due to this unprecedented crisis, they would have also brought down up to that investment grade. And with that, in this definitely a few of the, of course, there is also another mention that some of the government sector, the NBFC also would have taken the advantage of the lower interest rate on account of the RBI so much cut in the interest rate. They were able to raise this money. Similarly, commercial paper issuance in the month of September increased by 48% to 1.93 lakh crore as compared to 1.3 lakh crore in August. So this shows that there have been again interest in by various players in the commercial paper, and some of the well-rated and or even middle-rated NBFCs would have definitely raised the commercial paper also, other than that government special scheme of 30,000 crores, where they would have also invested in the smaller maturity, 3 months maturity of CPs. So that the banks have always supported, and currently, as rightly mentioned, that the lending through the NBFC in terms of the priority sector lending, covering recently RBI revised the private sector guidelines. So there are quite a lot of new areas, including renewable energy, startups, and rural infrastructure and all. So in that, some of them banks may directly do, but any of that very specialization and uniqueness and nicheness of the NBFC, it is ideal that we would participate through the NBFC. And it is in this regard that the co-origination model or co-lending model has been found a necessity, and the RBI has promoted that. And in the current today's RBI, that it has been made available, as Raman Agarwal has mentioned, to all the NBFCs. So this should enable, as Ramesh Iyer has said, that whether all have to have a view on their business model, and in tune with the response coming from the bank and the regulatory authorities, whether we could model our model and see that we play very important play, NBFC, in providing such origination of priority sector lending to the with the risk participation. That is also a good model. Of course, banks normally look, what are the issues banks look at funding? With this, I'll cover for 2-3 minutes, and then I will, that they will always see what is the capital adequacy level of the NBFC, and who are the promoters of the NBFC, whether in terms of good period and bad period, whether these promoters have the ability to pump in additional liquidity, particularly this in the unprecedented time. If you are approaching the bank for funding, I feel that on the other side, you also should strengthen your capital base, because the RBI governor has also said all the NBFC, including banks, of course, banks and including NBFC, will have to make a stress test and hold enough capital buffer, not only to meet the incremental credit demand, but to meet the pandemic shock. So in that respect, that coming capital from the promoter will enable them to have a more, what you call, positive approach. Second is, of course, as mentioned, that you have to give a proper feel of your current portfolio, what are the risks and how you have covered, so that not only to the bank, even to the rating agency, because I find that rating agency fears that in spite of the restructure, the percentage of default as well as the NPA level and also loss of revenue due to the incremental business not being there, there has been a slight view by the rating agency that the NBFC may have, for the first time, what I'm telling, their growth itself may be negative. Of course, it is with the economy per se. That way, even the bank credit growth this year is 1.4% negative over the 31st March, and year to year it's hardly 5 point. So that there have been a mention that banks have become little credit averse, but normally what has happened when the banks grow the credit, sometimes it is being mentioned that banks are really aggressive. When banks are in lieu of the credit demand and the market perception and the economic risk, when they are little slowing down. But this credit growth per se is not to be seen in the context of only credit, because there have been also parallelly, there have been investment. So, and also support to the government. So the commercial banks support the government in endeavor by investing in government securities, as well as investing in the commercial paper, NCD, and other short-term, medium, and long-term bonds, along with the credit. So that is the one area that you see the capital of your bank, your rating, capital of your NBFC rating, and risk perception, stress testing, and portfolio diversification, and similarly diversification of the portfolio of your liability profile. That is where somebody, our Srinivas also Raghavan mentioned that some have gone for ECB, some have and some of them, as Raman has said, that they are still not tested the treasury market. Over a period of time, there may be also demand for that they have to necessarily go into that. And one more important thing is whether these NBFCs also can look at collaboration, partnership, or merger, so that they will go in a strengthened mode, not only in reaching out to that such unserved sectors, but also to give confidence to the banks in funding them. I think I will come back on the next rounds. Thank you, IRG.
Thank you, sir. I think Mahesh, with the given time frame, maybe it is useful that we take some questions from the participants, so that we can address some of the questions which came in the chat box has been answered by Raman. But if there are other questions, if some participants wants to ask, you may put up your hand.
Yeah, we have got exactly 10 minutes for the question answer session.
Yeah, so we will wrap it up very quickly.
Yeah. Mr. Jayesh Modi, I think, wants to ask.
Yes. Hello.
Yeah, go ahead.
Can the person who wants to ask the question, please put up your hand. Raise your hands.
I think Selvi, Mr. Jayesh Modi has put in the chat that he wants to ask. So
okay, Mr. Jayesh Modi. I'll just unmute him. 1 minute. Mr. Jayesh Modi, yes, I have unmuted you. Can you just ask the question? Yes, Mr.
Hi,
Jayesh.
I'm Jayesh. Yeah, am I audible?
Yeah, you are.
Yes.
Yes, sir. Please go ahead.
Yeah. Yes, sir. Thanks for this. Thanks for the invite. I'm Jayesh Modi. I head the Inclusive Banking Unit for HSBC. My first question is on the MSME new definition, which just got discussed. Given that the new definition is where the MSME has to get himself registered as Udyam, and given that, say, like a truck operator or a small MSME, or like an individual who may not be able to, or even a microfinance woman borrower who may not be able to get themselves registered as Udyan, what's the view of the industry in terms of how going forward you will classify this as PSL on MSME space? That's my question number one. Question number two is on the on-lending. As in on-lending, after a long period of time from 2011, I think this regulation came last year, but with the 5% cap, and that also was to be shared with the HFCs. So this 5% cap, is there any view? Okay, and the third question is,
Mahesh, you have to mute yourself. Mahesh, you have to mute yourself.
I have muted him. I have muted him.
And my third and the final question is, we have seen recently the moratorium, which was so we have a good significant book on securitization. We have seen that the moratorium was being given by various originators, but there was no clear-cut policy for the investor to treat the PTCs on the moratorium, and similarly the similar process is now also happening for restructuring. So is there anything which is being thought through, or as an investor, how we also can get protected in terms of various RBI guidelines? These are my three questions.
Yes, who would be answering the question, sir? Hello?
Yeah,
Yeah.
yes, sir. TT sir, please go
Yeah,
ahead.
yes, Mr. Iyer, please unmute yourself. Hello?
So TTS is taking the question.
Yeah, I'll take one of the questions. Jayesh, I think your last question on the moratorium, I think it's really more a banker to their NBFC customer issue, because as you rightly pointed out, from our point of view, if one of our borrowers came to us and let's say we have 5 contracts with him, 3 of them are part of a PTC and 2 of them are not, there's no way we can tell our customer that we will give you moratorium on these 2, not on the other 3, right? That's not the way we deal with our customers. So for us, a customer is a customer, whether he's got 1 vehicle or he's got 5 or 7 vehicles. So we'll have to give him the same kind of treatment. But from your point of view, what you ask is right. How do we then handle this? And that is where I think, as term loans go, I think most NBFCs did not ask their bankers for a back-to-back moratorium. But on the securitized paper and on the direct assignment, I think there is clearly a need for both the investor and the originator to be in sync, right? Because ultimately, we are addressing the need of the end borrower. Whatever our respective roles may be, the moratorium was made available to address the problems of the end user. And I think both of us have to be in sync in terms of addressing that end customer need.
I'll take the
Aman,
other
you
question.
want to take the first?
But see, on the first question, I think as far as I understand, basically going by the new definition of MSME, it's primarily focusing on 2 parameters in terms of the investments and the turnover. So I think as long as those 2 criteria are met, I think what you are referring to is under the Udyami scheme of the MSME ministry. I think that is not an actual prerequisite to be eligible under that. So I think that needs to be clarified. The second part on the on-lending, yes, that is something which you are absolutely right, because this on-lending to the priority sector, bank borrowing to NBFCs for on-lending to priority sector there was no restriction till 2011, and it was abruptly brought to a halt. Now they have opened up, but only 5% of the total PSL lending. So we have been representing to RBI on this. This is, I think, one of the most important items we've been taking, both at FIDC and the chamber level, to increase this limit to at least from 5 to 10. So that is the bare minimum we are saying. So
and it would help if the banks also pushed for a similar thing.
Absolutely. Absolutely.
Okay.
We have the
Next question.
room for one more question, if
Yeah.
Or
Okay.
Shelby, you can read from the chat one question just.
Yeah. I'm reading the first question that came in. The government has announced that rupees 2 crores of loan will be given interest on interest benefits. So how do you see the same affecting liquidity of NBFC, and to what extent? At same time, financial institutions have to pay the depositor.
So let me attempt, that is yet to be clarified as to how the interest is going to be picked up by the government and how the reimbursements would come back, etc. But nevertheless, I think that let's dealing the two, which is what we have to pay as interest and service our debt. We should continue to do so. And definitely what we have to charge our customers, we know based on moratorium, what is the interest that we need to charge. And I'm sure sooner or later this kind of a guidelines, if you may call, or a process will get announced as to if the government is picking it up, how are they going to do it, how should one reach out to claim. And I think at this stage, I'm not sure anyone has a very clear understanding of how that modality is going to be. But since that they have said that's what they want to do, I'm reasonably sure that there would be a good process in place which would help all of us to really get our interest back if somebody else is picking up instead of the customer.
Yeah. Mr. Ayer, I think it's already 4 o'clock. I think we should stick to the time.
So let's wind up. So let me give a very quick 1-minute summary, if you allow me to.
Yes, sir.
I think as all of us are saying, I think these are honestly good times for NBFC. While we know the marketplace is very difficult, there is no doubt in anyone's mind. But NBFCs historically have performed extremely and exceedingly well in difficult times. And with all the support that we are now hearing from different quarters on the liquidity front, etc., as NBFC, my only request from FIDC or from IMC or any chamber for that matter, for all our players would be, we have to be as transparent as we can. We have to be as disciplined as we can, and we have to be as communicative as we can be with all the entities that we are engaged with. I'm sure we will get all the benefits that have been listed out. I wanted to place on record our appreciation to IMC for taking up this cause so exceedingly well at the most appropriate time, and want to assure all the participants, all the NBFCs, that FIDC, IMC, every chamber, we will not leave any opportunity for able to reach out to the concerned regulatory bodies or to ministries, etc., and put forth the requirement of the industry and work hard to see how best all of us can be benefited. I would stop there, wishing everyone all the very, very best. Take complete care. But I would once again urge everyone to look at this as more positive going forward, as a good opportunity post-festival season. Things will start turning around, and at the right time, the liquidity measures have been announced. I'm sure all of us would get the benefit and we would bounce back once again and reboot the economy. Thank you once again to the President IMC and Mahesh, the NBFC Chair, and all my co-panelists for expressing your views very transparently, and all the participants to have joined this seminar. Thank you very much.
I also thank Ramesh Ayerji, Mahesh Thakkar, and Poddarji. Thank you.
Thank you, Mr. Ayer, TTS, Raman Agarwal, and Dr. Narendra. It was a wonderful session, and members benefited a lot. And friends, the questions which are put in chat and not answered, I request you to email to Indian Merchants Chamber, or IMC can come and send it to me. We will ensure that each and every question is answered by email to a particular person. Okay, we will take care of that. Because of paucity of time, we may not be able to accommodate them here, but we will give the reply by email very soon. Friends, we are coming now to the second session, which is more important. IMC members, which they are waiting for. What's important in life, they don't care whether banks have the money or not, NBFCs have money or not. Whether these people, the financial players, will give money to the MSME sector, the traders, the entrepreneurs, the shopkeepers, and everybody, vehicle owners. That's more important there for that. And for this purpose, 125 members already sitting in and waiting to hear our views, how we will give them money, in what terms and how fast. Okay. We have Mr. K.V. Srinivasan, co-chairman of Indian Merchants Chamber NBFC committee, as well as IMC, FIDC, who will be chairing the session. And I'll request Shelby to introduce the panelists, and then Mr. Srinivasan can take over. Thank you.
Okay. Thank you, sir. Thank you. So now we move on to the second session, which will focus on NBFC's funding for MSMEs, traders, entrepreneurs. I would like to invite the chairman of the session, Mr. K.V. Srinivasan, co-chairman, IMC NBFC committee and FIDC, and director and CEO, Profectus Capital Private Limited. And the esteemed panelists. Joining him in the session will be Mr. Shachindranath, Executive Chairman and Managing Director, UGrow Capital Limited. Mr. Umesh Revankar, Managing Director and CEO, Shriram Transport Finance Company Limited. Mr. Shailesh Haribhakti, Chairman, Shailesh Haribhakti and Associates. To initiate the proceeds, I now hand it over to Mr. Srinivasan. Over to you, sir.
Thank you so much, and thank you very much to IMC for organizing this very rather topical conference. I think one of the things that has happened as a result of the post-pandemic situation is that both NBFCs and the MSMEs have actually come to the fore. I think if you really look back, the pronouncements made by the government as well as the RBI in the past few months, with the view to restarting the Indian economy, I think these two words have actually taken predominance in their mind space. And I think all this for good measure, simply because India is known to be a nation of shopkeepers. And if you really look at it, it basically means that our economy essentially runs on the contribution made by the MSMEs, whether it is in the manufacturing sector or in the services sector. And more importantly, now it's becoming more and more prominent is the agricultural sector as well, where MSMEs have actually played a very significant role. While like the captain of a team, the larger industry always takes the the kudos and all of that for wonderful performance. I think they would be a failure unless and until they have a very strong MSME micro system really behind them. So that is something which is really now being recognized. And whether you look at the Japan model or the Chinese model of development, all of them have actually ridden on the basic thriving and rejuvenation of the MSME sector as well. So I think India, therefore, given the fact that the pandemic has actually posed India a lot of opportunities. Yes, we are smarting under the effects of that very clearly. Most of us are still under lockdown. Economy has taken a beating, but it also gives us a huge opportunity as a nation, and more importantly as MSMEs, to take the thing forward in a more positive manner. And whatever every crisis really throws an opportunity, and if we are able to utilize this, I think the future will be extremely bright, much brighter than what Cassandra's would have you believe. Now, in that sense, the policy statement or the mood of the policymakers is very clear, that they want to support the MSMEs, because in a nation which has got almost 140 crores of people, bulk of them being youngsters, and the government is going to push for things like skill development and education and what have you, we will really have a social crisis on hand unless and until we are able to generate enough amount of employment. And employment generation cannot be done by the large industry. It has to be the domain of the MSMEs. And so therefore, the MSMEs become very, very critical for the future stability and growth of this nation. It's not just a question of a sector doing well or not. It's just the very DNA or the existence of the country itself which is in question. And if you ask any MSME what is the most important thing that is there on their mind, and especially in the current crisis scenario, it is very clearly liquidity and funding. Traditionally, banks have occupied a preeminent space in funding the MSMEs because of the PSL norms and so on and so forth. But over the past decade or so, NBFCs have started to play an extremely important role, so much so that today, and the NBFC's contribution towards funding MSMEs is actually speaking larger than what the private banks are doing. The NBFCs cater to almost 22% of the stock of MSME loans that are there in the country. But more importantly, 70% of the new to credit loans are actually being dished out by the NBFCs. So the true work of financial inclusion and reaching out credit to those people who have hitherto been not touched by the formal banking system, 70% of that job is being done by NBFCs. Now, you can ask the question that, without the kind of advantage of cost of fund and all of that, yes, NBFCs tend to be costlier, but what really makes the MSMEs actually come to the NBFCs? That's one of the questions that which I have to the panel. But frankly, we'll follow a slightly different model in this session than what was followed earlier. I think I will stop my monologue out here, but let the eminent panel actually answer most of the questions that come to my mind and whatever the audience would have for them. Let me ask the opening question to Mr. Sachin. Sachin, you might be aware, has actually set up UGRO, which is focused on, whose mission essentially is to give credit to the MSMEs. Sachin, what is the magic that you expect NBFCs to actually perform in funding NBFCs, because you don't have the cost of fund advantage, you don't have the reach which let's say a State Bank of India would have. Why should NBFCs really get the MSME market?
Thanks, Srinivasan. So, having dealt with the diversified financial services, given that my personal background was mostly from a very small city and town, rural economy, when I decided to turn to entrepreneur and looked at the broad landscape of financial services industry, what was most striking, and this might be a little funny, but I give this example to everyone. Think of two MSMEs. This is I describe a difference between an NBFC and a what I call a diversified large format lender, which is predominantly a bank. Think of two small businesses. One is a dentist and another is an IVF clinic. And think of how a large bank credit manager go and ask what question to give credit. Generally, a large bank's credit manager would go to a dentist and ask the question, sir, आपके यहाँ कितने patient रोज आते हैं, right? How many patients would come to you? And in his mind, he will calculate number of patients by some amount of rupee and say, okay, this is a good doctor because there are a large number of patients coming to this place. And then second, he will go to an IVF clinic and ask the same question to the IVF doctor as well. Sir, how many patients come to you? Poor IVF doctor would say, I receive only probably one patient a week. And he will say, oh, you are not a good doctor, right? Because you don't have too much of patients. I think so that's the moral of this story, is that when it comes to MSME, it is such a non-homogeneous sector that you have to go really deep to understand and define a credit metrics, and in recent time use deep data analytics and support your underwriting from that. And it is not that that ability cannot be built by large bank. It is just because banks have too much to do at same point of time that sometimes they miss this small point, that when it comes to MSME, each one of them differ from other by geography, by location, by style, by work. And how do you build credit model to service that very, very small niche segment of the market? I think so NBFC generally, forget not only just the MSMEs, historically all credit or lending innovation in India have happened through NBFCs itself. There was a time when nobody used to fund a second-hand truck, and Shriram Transport Finance created that market. There was a time there was nobody used to lend against a household residential jewelry. There are multiple gold loan companies created that. There was a time there was nobody which was willing to finance against a rural tractor or an agri. A lot of time NBFC did that. Innovation in credit always happened for people who are deeply focused of a particular sector, and that job just not in India but across the world is always in the hands of non-bank lender. And because of your sharpness of focus and on creating of the asset side, you always have an ability to charge little more, and that's why your higher cost of fund actually compensate for that. And that's why if you look at return on asset or return on equity, most of the NBFC in a 10-year time or 15-year time horizon actually outperform lot many banks and private and public sector banks.
That's very important, So the key factor why an MSME should reach out to an NBFC and make an NBFC as a financial partner is this whole concept of innovation, tailor making of a particular loan, because MSMEs are so varied, and as you rightly pointed out, there's no, they are as similar as chalk and cheese. So if you go with the one-size-fits-all policy, which is what mostly banks tend to do, they really don't do justice to the needs and the requirements of the MSMEs. And that is exactly why it pays to pay a little extra to an NBFC in terms of higher interest rate, but you actually get much more bang for your buck, right? That's the key point of Sachin. Thanks, Sachin. I'll come back to you on another matter later. You did mention, the fact that in rural and all of that, NBFCs have been pioneers in that. Now, if you really look at the GDP data, I mean, I think virtually every sector tanked by, several scores on the negative number. But I think one sector which really was a positive on that side was the agri sector. And I think the current mood in terms of, a bumper purchase of two-wheelers and tractors and even small cars, etc., is actually being fueled by this rural upsurge, right? Primarily driven by the agri good performance. I think 3.4% in one quarter is something that we don't normally get to hear from the agri sector. It's actually much lower. Now, if I would request, Mr. Haribhakti to come in, and he is associated with L&T Finance, which is a huge entity, and one of their many lines of business is, of course, rural. How do you see this whole rural sector actually panning out, and what plans you think NBFCs can actually come across and give to the MSMEs predominantly which are in rural or semi-urban kind of an area?
Well, thank you very much. Let me begin by thanking IMC and FIDC for this opportunity. The rural sector, the good news is that it is thriving. I'm absolutely delighted to tell all of you on this webinar that the rural sector has delivered the highest performance in the month of September that we have ever seen. And I think that's a leading indicator of many factors. The policy orientation in the rural markets has been amazing. The dismantling of APMC, which was made out to be such a controversial thing, happened. A whole lot of old stereotypes and old mindsets had to be set aside. And this is opening up the competitive spirit amongst all states. For the first time on basmati rice, Punjab, the state in which the greatest agitation happened, has reduced the levy for export. 23% growth has happened in agri exports this year. This was what the Prime Minister said just yesterday. And the way that the FPO, the Farmer Producer Organization, has actually taken root in rural areas and has positioned itself to obtain crop loans is an amazing example of what innovation can do in the rural sector. Take tractors, take two-wheelers, take microfinance. The high touch, high knowledge through the entire credit cycle is what gives the NBFCs, who, as Mr. Sechendranath pointed out, have an absolute close link and relationship with the customer. In addition to that, we are so comfortable with deep data analytics. Almost everything that L&T Finance does is fully digitalized. And I feel that this is the way that in India, if we are in a position to get the rural areas going, we can make a huge difference. Let me leave 5 thoughts behind for this entire audience and for it to be propagated. The Reserve Bank's policy was excellent, and I think we need to compliment it, welcome it. But we do need some sort of a statement on what would happen under different scenarios and what would be the policy stance. Important that all lending, all monitoring, and all recovery is digitalized and make every process data-led. Absolutely important to create in rural India infrastructure of very high quality, support community living of the urban type, semi-urban type, create smart villages. The opportunities to lend in this manner are so immense, it's not, it only leaves us to imagine it. And support the rural gig economy. Now, we always think when you talk about the gig economy, we are only thinking of urban India. Actually, the gig economy is amazing in rural India. You go to any village and you'll be swarmed by people who want to show what fantastic work they do. They will accost you, give you price quotes immediately and want to close the deal right there. That's the gig economy which is flourishing. Innovation through collaboration. Every player needs to collaborate. Institutions, regulators, NBFCs, banks, customers. We talked about this in early part of the webinar, but this is critically important. If collaboration happens, we can set this entire market afire. Growth rates of 20%, 30%, I'm saying are possible. The cost of money has come down. We have a very, very good wicket on which to bat in rural India. And finally, we need to actually finish the disbursement of the 3 lakh crores that was promised. That is critically important to revive the MSME sector. And we must remember, 99% of all MSMEs are micro, more than 99%. And therefore, this whole thrust on microfinance, whole thrust on very small persons, two-wheeler finance, tractor finance is very critical. So we need to set up maybe a far larger, over $10 billion fund dedicated for MSMEs. The 750 million World Bank support is not going to take us too far. What we truly need is huge equity and debt flows available to the sector, particularly in rural India, to recreate the infrastructure that we have really not built. Why should we have only smart cities? Let's go and build the next 100,000 smart villages. Thank you.
Very well said. I think, in rural areas is where bulk of the Indians live. So if we have to make their lot a little better, we should focus upon the rural economy, and the maximum amount of innovation that can be done is actually, the potential is highest in the rural area, not in the urban areas. And the last point, or the first point that you mentioned, is that the current despondency is very city-centric. You move out of the cities and go into rural areas, actually it is a much more vibrant and buoyant mood than what you get to see in Bombay and Delhi, right?
Absolutely.
so if you really want to make this as a self-fulfilling prophecy, go to the rural areas and get some dose of positivism.
Right.
That's very well said. I think honestly, while the sectors, whether it is the rural sector or the industrial sector, whatever they produce, actually the entire produce will be useless unless there is somebody to actually transport it. And, the transportation sector and the logistics sectors is something that has taken a significant beating during the pandemic, because, there was a fair amount of lockdown, and at least in the initial months, while things have opened up quite a lot. How does Umesh Revankar, who runs the biggest transport funder in this country, see this whole sector actually picking up? And, if you really look at it in terms of employment generation, I think the transportation and the construction sectors are perhaps the biggest and the deepest, right? So how do you see this whole MSMEs operating in these two segments actually picking up? And what plans do you have for pushing them up the growth ladders?
Yeah, thank you, Srinivasan. Thanks, IMC, for giving this opportunity to talk to the audience here. See, as the earlier speaker rightly said, what's most important is understanding particular sector or segment and specializing into it and getting into it. So the entire logistic operation or the transportation operation, if you see it is linked to so many activities. Now it is linked to agricultural transportation, including perishable, which needs to be transported very quickly, like your milk or vegetable or fisheries, etc. Then you have FMCGs. There is a packaged food items that need to be transported. And unless it's transported in the right time to right place, it doesn't get value. Then there are manufacturing activities where a lot of raw materials need to be pooled, finished goods need to go out, warehousing has to be in the right place. Then there are other segment which also requires large number of what I should say trucks or the vehicles are mining, real estate, infra. They all carry bulk material like a steel, cement. They occupy large portion of the transportation, and they normally, whenever the economy goes quicker when these activities move. You need large number of vehicles very quickly. Therefore, sudden demand for heavy vehicles sometimes come. You would have seen in the past cycle that suddenly the heavy vehicle demand goes up by 15, 20, 25% year on year. Then whenever the economy slows down, then the demand comes down and goes negative. Then also you have the other people transportation for tourism, travel, city transportation, staff transportation, and school buses. So all these activities, if you look at, most of them are run by small operators in India. And how the small operators have engaged into this kind of activity, why they are successful and why they are thriving is mainly because the size of India, the population of India, it needs a different solution, different kind of people, and individuals operating into this business also bring the cost of operation comes down because they maintain the vehicle, they drive the vehicle, they're not dependent on the outsiders. See, so here the family run the businesses, their own people are part of the business, so to bring down it brings down the cost. And also it gives them a pride of ownership of a vehicle. And typically the transportation activity, if you look at each of these asset classes, has its own repayment period. Within 3-4 years, you are able to repay the loan and you are proud owner of the vehicle. So your investment gets returned quickly. So so many individuals are there. 70% of Indian fleet today is run by small operators or individuals. Only 30% are operated through the logistic operators, and they also have an advantage of knowing the moving parts, in the sense they know the MSME manufacturer, they know the supplier, they know the consumer, so they become a part of that particular society or system or community so well and become a part of a solution. So only when there is large industrial operation where you need a logistic solution, supply chain management, there probably you need large fleet operators. So the Indian system is so developed that the small operators play a very, very important role, and it also creates a lot of employment, as you know, as I rightly put it. Probably around 1 crore vehicles are registered in India, maybe 4 to 5 crore of population are engaged in transportation directly or indirectly into the activities. And when the economy is closed down, the new vehicle demand comes down, but existing vehicle have to run. So that is the advantage. The used vehicle demand or the existing vehicle is already registered. They keep moving. They don't stop. Only thing is, the new vehicles supply into the existing vehicle fleet gets reduced over the period till the demand comes back. Moment the demand picks up, like the infrastructure activity improves, then heavy vehicle demand will improve. If now the e-commerce is doing so well, so demand for a small commercial vehicle is very good, both in the city and semi-urban city. It is not just in the rural area. Even the urban cities, you are seeing very good demand for smaller vehicles, and new vehicles are selling well. And suddenly there is a demand for cars, mainly because the transportation requirement has gone up. It could be individuals who are buying it, but I feel ultimately the cabs and taxis will play a major role, because people may be hesitant to go into a mass transportation for some more time to come. So I feel the taxi and individual transportation will have a major traction. So I feel the transportation industry per se, individuals are totally linked to the businesses, and they're able to bring down the cost by operating themselves, and therefore making it viable for both the suppliers and to the owners themselves. So I think as we predicted for the existing vehicle operator, it is almost V-shaped recovery, and we are seeing very good traction in the month of September. only travel tourism where people are still to spend their what we call disposable income towards travel and tourism. That is taking some time. Maybe it will take another couple of months to recoup, and maybe from January things will improve. So I think lending to these people requires very intrinsic knowledge, knowledge of people, knowledge of vehicles, knowledge of asset classes, earning capabilities. These this need to be ingrained and understood, and that therefore a company like us have a lot of opportunity in this market. And also there are so many others who are into this business. Many of these asset financiers are into vehicle financing because they are able to supply credit to the niche segment which they operate in, or geographies which they are operating.
Great, thanks, Umesh. And I think traditionally NBFCs have been rather transportation specialists, right? So it's that's been that, and gold loans have been their forte, even in the face of very tough competition from some of the banks. I think one question which always keeps coming back to me whenever I go to any seminar, or whenever I talk to any MSME, they keep saying that, look, all this wonderful talk about MSME being, the most important sector in this country, etc., is all nice, but where is the money? Why are we not able to raise enough amounts of funds from banks or NBFCs? Everybody talks nice words, but when it comes down to giving money, they always pull their bags back. So the question which I would raise to Sachin, because he's been a practitioner of MSME lending for some time, that why do you think this kind of a gap between expectations and reality exists, and what do you think the MSMEs can actually do to deserve, or I would say to force the NBFCs and banks to give more credit to them, which I'm quite sure they truly deserve?
Yeah, so you might not be able to see me. There is a power outage, but at least you can hear me.
So I thought you had become Mr. India.
No. But anyway, I think there are two parts to the story. First is that all businesses, and including MSME, have to appreciate that as lenders, our principal objective is to protect the principal itself, right? Lending is not, the earning the interest is the secondary, but first objective which everyone is conscious of is that your money comes back to you. And historically, the method of assessment for a small business, or for that matter any business, has been to look at the income profile of the MSME. And the way India have been, because of the tax regulation and because of the culture of not doing business outside formal economy, actually made large portion of these businesses unbankable to a large extent, because banking was always to go look your tax return, look your balance sheet, look your income, and you were not there was nothing visible there. And then how do you lend to somebody who doesn't have it? That's the problem number one. And some of that is getting solved. Then lenders started resorting to what we call collateral based lending. So everyone understood that, okay, you may have an income which is not visible, but at least if that is not the case, please give me a property and I'll lend to you. But there is a limit to how much of a property a small business owner can give. So if you look at the last decade or so, each of these owners gave their first primary property, then gave secondary property, and then they exhausted. So that also is an era is coming to an end. So the first part of the story is that if you really want to avail credit, you have to be like a business and you have to be very transparent. Your business, your cash flow has to be visible. Second, I think so that advent of technology and the way the digitization is happening for small businesses is gradually changing the color of SME financing. What we have seen in the payment industry is what you will see in next 3 years in the MSME space. So things like account aggregation, GST is dramatically changing the lending to MSME. Banking and when the account aggregation and every lender being able to pull your GST and banking, he will be able to assess what's your turnover, what's your cash flow. But obviously the SMEs first has to be digitally enabled. They should be digitally ready and they should be open to provide that information. Now saying that I run a small business and you don't have the things which can give comfort to a lender, then obviously you will not be able to avail. That's part one. The second part of the story is on the lender side. Lenders have to go beyond the what I call collateral based financing and have to think hard that how to use technology, data, and what is happening in the ecosystem to go to cash flow based financing. So if you look at what is happening in Gem Sahai, we're looking what is happening in threats, or all of that, what is innovation is coming would now evolve to cash flow based financing. So that's why I'm very positive in next 3 to 4 years that you'll see a massive credit creation in MSME space, and that's I think so where the most of the things stand today. Obviously, the challenge which we discussed in the last panel, that in spite of NBFC doing all that innovation, finally they need to be funded positively for providing that credit. But as long as small businesses understand that there is if you want to avail the credit, there is minimum things which you have to provide, and as long as lenders start thinking to go beyond traditional approach of only collateral based lending and start thinking of cash flow, you'll be able to do that. I think so that's where is our view that how things would be. And I'll give you one more second, an anecdotal example of how MSMEs are not prepared to, in terms of the being digitally adaptable. So when COVID came, we launched a program called Sanjeevani, and we said our mission is 100% digital. So in lending, KV, that every time you lend to a borrower, a credit manager want to go and meet physically a customer. And I came from non-lending industry. I said, this is not required. No? Today you can do a video KYC. Why you have to go and meet a customer? So we launched a video KYC. Out of July and August, the first 2 months, at least 85% of our customers, their mobile numbers were not linked to Aadhaar, which means our video KYC failed. So this looks as simple as this is small thing, but MSME not being aware that for a legitimate video KYC, you need your mobile number to be linked to Aadhaar, just failed our video KYC, which means that those customers went into the queue of physical underwriting, which means got delayed by another 30 days.
And this is very important. I think while it is one thing to say that banks are not lending us or NBFCs are not lending to us. There is a lot the MSMEs as a sector themselves can do to change things, right?
Yeah.
As they say that I started by saying that I'll change the world. Ultimately, after 50 years of journey, I realized that I should have started by changing myself. I think that actually pans out very clearly in case of the MSMEs itself. I think gone are the days of fixing out how much of tax you want to pay and then working your P&L backwards.
Yes.
I think in the digital era, to hide your turnover is neither possible nor desirable.
Yeah.
It's better to pay the 30% tax or 25% now and keep the balance 75 and look towards a much faster growth and pay the cut to the government in the official manner, right? And I think rest of it is actually better. I completely agree with you. And frankly, we are talking about digital, we are talking about government taking so many initiatives to formalize the entire economy. And the key focus is very clearly on the MSME side. Now,
KVS, I'll request you to take question answer. Selby, you can take the questions from IMC members. Nayan Patel and all are sitting. So if they can raise the issues, particularly on the funding, please. We have 10 minutes for question answer session now.
Yeah. Should I start with the question answer session?
Yes.
Okay. Okay. So can everybody who would be like who would like to ask questions, put your names in the chat board so that I can come to you. Yeah, there are quite a few questions in the chat board, Mr. Srinivasan.
Yeah.
Yeah.
Okay, one of the things that has been talked about, and which is what I was actually coming to, a little while ago, is this whole issue of co-lending, co-sourcing, whatever you call it. How do you think, Mr. Haribhakti, this is going to change the way NBFCs would lend to the unbanks, of course, would lend to the MSMEs? Is there a significant upside for the MSMEs in this co-lending issue?
I don't actually see that as a very big, breakout kind of innovation, because we have just come out of our economy. We are just coming out of this multiple bank lending, and we have seen, I mean, I have particularly been into so many of these large forums where 50 lenders come together and actually nothing happens. It keeps getting postponed. So
I think we have lost Mr. Haribhakti's connectivity. So can we take up the next one with somebody
sure,
else?
no, but in case Sachin would want to respond to this.
I'll just spotlight him. Yeah. Okay, Mr. Sachin, you're in the spotlight. You can answer that.
You need to unmute yourself.
Yeah, just a minute, sir. Please unmute yourself, sir.
Yeah, sorry, I was trying to unmute. I was not able to do that.
No.
Yeah, I think so Mr. Haribhakti is back.
Okay. I'll just put him. So both of you all can be added. Yeah. You can give your views. Sir, please unmute yourself, sir.
Yeah. So basically what I was trying to say is that we are beginning the era of one-on-one relationship driven, cash flow driven, privacy giving way to transparency, all of that era. We're also getting into an era where a large amount of resource raising capability exists, particularly amongst the larger NBFCs. And therefore, I think it will be important in a few instances. There are only 5,000 medium-sized MSMEs. So out of that, maybe there might be 100, 200 occasions where co-lending can make a big difference. But I doubt whether that's going to become a big thing, particularly in the case of the large majority of the micro enterprises. This is irrelevant.
So probably an on-lending scheme which is more liberal, where NBFCs actually lend and take a back-to-back financing from banks would be more beneficial for the MSME sector. Point taken. Now I come to Umesh. Umesh, one question which is a very interesting question, a little controversial perhaps. The question says that why is everybody talking about digital lending? What about the bulk of 99% of the MSME which are not digitally savvy? I'm quite sure a lot of your transporters are not all digitally savvy. So how do you kind of address this whole digital versus physical kind of underwriting?
See, basically, the digital is used very loosely. What I feel is because anyone who can apply his application on a mobile, he is a digital. So everyone has a smartphone today. So you ask him to fill few application and make an application to you, and you can onboard him digitally and maintain his record digitally. You can have complete his KYC digitally, everything you can do. It is not that, no, it is total transformational. That moment you are in digital, you scale and make business very large, not so. Because in India, I still feel, or rather our business model suggests that you still need to meet, assess, understand, and there are so many other requirements for anyone to be partner. Because financing is partnership. Financing is not just one-time lending, as many people see. I feel it's a continuous journey of needy borrower and the lender. So I feel when it is a journey, then you need to be continuously in touch. And I don't think lending can be highly scalable model. And if somebody is thinking that it's highly scalable, fast growing, then I feel there is always a risk. So we need to be moderately growing with good relationship with the borrower and the financing partner.
Yeah. I would just add, KV, on that. I don't know what, we have to define what digital means, right? And I think so that everyone is digital now. I'll give you two examples where, when I live in Gurgaon, but I used to come to Bombay every week. And my best friends were all the Uber driver who come from my home city, Banaras. And when you take a cab in BKC and tell him you have to go to Nariman Point and ask him, do you know where Nariman Point is? He says, "Saab, humko kya pata, ye to Uber ka app le jata hai," right? And the guy would be not even literate, right? So that is being digital, right? All of Umesh truck drivers and truck owners today now use Google Maps, right, to reach to a location. That's what digital is. Every small business today is connected. As long as you know only this much, that you can go on an app, you can give an OTP for your GST, you can give an OTP for your bank, and you're open to allow those two data to be fetched by your lender and analyze in that. We don't need more than that, right? We are not expecting MSMEs to build AI and machine learning in their businesses to become digital. That's a job to us, not to
Absolutely.
them.
So it's not mumbo jumbo. It's very easily doable. Actually, life a lot simpler.
Very much.
Right?
Very much.
Absolutely. I think on that note, I think let's kind of conclude this session. I think the bottom line is that while the sector is important, the sector also is changing very rapidly. I think COVID has given an opportunity for the MSMEs to probably relook at their own business models and all of that. Over the past few years, definitely, since the generations are also changing in the MSME ownership, the younger generations that are coming in are far more transparent, far more, I would say, forward-looking and ambitious. So I think that inner, energy itself would propel the MSMEs forward towards greater scale, better corporate governance, and definitely more transparency, and therefore easier funds availability. And that's on that note, I hand it back to the organizers. Thank you.
Yeah, thank you, KVS. It was a wonderful session. And of course, again, many questions are unanswered, but once we get the email or note from IMC, we will be replying to them. Thank you, KVS. Thank you, Umesh Revankar, Shailesh Haribhakti, brilliant as ever. Is also our past president at IMC. So it was good to hear you again. And Sachindranath, you grow. At NBFC, always we say you grow or paisa lo. We never talk about ourselves. We talk of our customers who are MSMEs. Their growth and their business means our business. Shelby, you can invite
Yes,
me.
sir. Yes, sir. After these two elaborate, knowledgeable sessions, may I now request Mr. Atul Joshi, founder and CEO, Oyster Capital Management, to summarize with the concluding address. Over to you, Mr. Joshi.
Thank you, Selvi. We have had a very, very insightful discussion, not only from the veterans of the industry, but also the Q&A question and answer session. Some of the key takeaways that I look at from this particular session was that NBFCs are not really competing with the banking system anymore. They have developed their own systems, their own presence, and there are segments where they have a lion's share. So this is reflected in one of the RBI's announcements today, that they are now looking at co-lending for NBFCs along with the banks. It's a recognition to the banking sector, from the banking sector to the NBFCs, that now you have arrived as far as the lending is concerned. Some of the other things which I really liked was that NBFCs is not a homogeneous set of products of lending. It's a continuum of lending, starting from the wholesale on the one hand and retail on the other. However, across this continuum of spectrum, there are challenges for each and every NBFC. The large ones have different sets of challenges. The small ones have their own challenges. And the ones which are not even rated have a completely different set of challenges. And we need to harmonize all of them. Another thing which I liked was what Mr. Raman said, that opportunities are hidden behind a crisis. And of course, this pandemic has opened up a Pandora's box, in a way to speak, where there are issues with funding, there are issues with credit, but at the same time, there are opportunities emerging. As Mr. Haribhakti said, rural could be the new ruler in terms of the credit. So rural markets are going to be ruling the credit markets over the next few months, few quarters, or maybe few years to come. And this is where the NBFCs have to play a significant role. Dr. Narendra mentioned about what are the concerns that the banking system has when it comes to lending to NBFCs. And what he specifically emphasized was the promoters. The promoters is the key to the NBFC lending, besides the capital adequacy ratio, the portfolio diversification, the liquidity diversification, etc. But the key thing remains to be the promoter. And another thing which you mentioned was about the rating. That rating is something which the bankers do look at. However, I coming from a rating industry, I feel that one of the ways that the NBFC sector would benefit itself is what Mr. Iyer said, is to communicate. And it's time to communicate with the rating agencies. Where they really do not appreciate is that there are so many limited options with the NBFCs when it comes to borrowing. The typical rating agency would classify most of the lenders either into the wholesale and then the retail. Within wholesale, your entire diversification coming in from banks, mutual funds, insurance companies, provident funds, pension funds is kind of clubbed together as wholesale borrowing. And the entire retail happens to be from the individuals. Now, how many NBFCs can really afford to go to the deposits way, and what are the restrictions thereof is something which is of a different debate, and you know, something that the rating agencies need to look at. However, as Mr. Iyer had mentioned, communicating with the stakeholders is very, very important. Another takeaway which I liked was the whole thing about the credit innovation. That credit innovation is going to be the key thing distinguishing between the NBFCs and the rest of the lending system. And here is where I think three key things that the NBFCs have contributed to the industry, to the country, to the economy, and the regulators need to really pay attention to this. NBFCs have always developed a concept, they've executed the concept, and they've matured the concept. Whether it is vehicle financing, personal loans, gold loans, micro lending to agriculture, micro lending to shopkeepers, the banks have always learned from the product that has been matured by the NBFCs. The banks are now partaking in that product. And really speaking, the entire credit for the product development and the risks associated with that was actually taken by the NBFCs. And we need to give that due credit to the NBFCs that they have pioneered the risk taking to the maturity of that product. The second part, which I guess the regulators need to recognize, is that today there are a lot of NBFCs which have a market capitalization higher than that of the banks. They play a much bigger role in development compared to some of these smaller banks, and this is reflected in terms of investor confidence in the market capitalization of these NBFCs. Another way to look at it is that what is the FPI holding in an NBFC compared to with some of the smaller banks or some of the nationalized banks, and we find that the foreign institutional investors also have showed a lot more confidence in the operations of the NBFC, in the existence of the NBFC, in the promoters of the NBFCs, whereby their holding is substantially higher when compared to a bank. So these three things put together, I guess, talks about where the future development of the regulations should be. If I look at the way the regulations in the past have been for the NBFCs, I think they were paranoia driven rather than prudence driven. So I would say in my concluding remarks that given the journey that the NBFCs have done so far, I think it's time that the regulators replace the regulations from paranoia to prudence based. Thank you very much.
Thank you, Mr. Joshi. May I now request Mr. Ajit Mangrulkar, Director General, IMC Chamber of Commerce and Industry, to present the vote of thanks. Over to you, Mr. Mangrulkar.
Thank you, Selby. A very good evening, ladies and gentlemen. On behalf of IMC Chamber of Commerce and Industry, it is my privilege to propose a vote of thanks at the end of this very highly insightful seminar on rebooting economy role of NBFCs, organized by IMC's NBFC committee. At the outset, I must thank all our esteemed panelists for their brilliant discussions. I think we learned a lot, and definitely I think we have seen that probably rural is the next way forward for NBFCs. So that was a really very, very insightful discussion that we've had. A special thanks to Mr. Mahesh Thakkar, Chairman of the committee and Director General Finance Development Council, for extending their support as co-organizers and making this seminar a grand success in this pandemic situation. I would also like to thank Mr. Ramesh Iyer, Co-Chairman IMC NBFC Committee, Mr. K.V. Srinivasan, Co-Chairman IMC NBFC Committee, Our silver sponsors, Shriram Transport Finance Company Limited and Magma FinCorp Limited. Our logo sponsors, Shapurji Palanji Finance Private Limited and Tata Motors Finance Limited. And all the members of the NBFC committee for making this seminar a grand success. I thank all you participants who have really, waited and patiently listened to a very, very brilliant discussion. I also thank the press and media for their extended support to this seminar. NBFCs play a very, very crucial role, and you cannot reboot our economy without the NBFCs getting into the act. And NBFCs are the engines for rebooting our economy. And I think these discussions will keep on adding value, and I'm sure that we'll come up with something very, very meaningful and will sort of boost our economy, and NBFCs, I would say, is the way forward. And I would like to conclude by thanking all our back-end secretarial staff who really have, struggled behind the scenes to put this together. Bharti, who's the OIC of this committee, plus Selby and her IT team, who really have been holding the fort for us in all these months. And of course, last but not the least, Sanjay Mehta, our Deputy Director General, who really, gives us, he's the absolute pillar of support for all of us. So I thank every one of you for this seminar, and I think we look forward to having many more such seminars as we go forward. Thank you very much.
Wonderful. Very nice, very well organized.
Thank you.
Thank you, Ajit. Thank you, Selby. I
Thank you,
think the
Majid.
video recording of this may be available on IMC and FIDC, both websites. People can see that within 2-3 days time. Selby, is it right?
Yes, sir. I just want all the speakers to give the approval that it can be uploaded, and it will be uploaded on YouTube. And we'll pass on the link.
Yep.
Yeah.
Fine,
Please go ahead.
Please go ahead. Fine from my side too.
Okay.
ahead.
Okay.
Thank you.
Yeah. Thank you.
And do join and participate in all our future endeavors. Thank you all at IMC.
Thank you.
Thank you, sir. Thank you.
Thank you, everybody.
Yeah. Thank you.
Thank you, President
Before
Rajapudar.
we leave, I would like to again thank our silver sponsors, Shriram Transport Finance Company Limited and Magma FinCorp Limited. Our logo sponsors, Shapurji Palanji Finance Private Limited and Tata Motors Finance Limited. Thank you, friends, for your kind cooperation, interest, and active participation. Thank you.
Thank you.
Please leave your email IDs in our chat session so that we can take your questions and pass it on to the speakers. Thank you. Thank you, participants.
Thank you, Selby. Thank you, Sanjay Mehta, Ajit ji, President Rajapudar, and Bharti. Are you all there? I think we had more than 126 people joined, maybe more of that.
Yes, yes, sir.
From time to time. So the target was reached, and the quality of deliberation was also good. Thank you. We finished 2 minutes before time. That's also a great achievement.
Yes, sir. Yes, sir.
Thank you.
Thank you, sir.